Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, 14th day of September, 2015, and this is the Daily Report for Gold and Silver. Quiet day on the Western Front. We do have gold futures trading higher with the majority of the precious metals complex a little bit lower on the day. Gold up about $4 to $5, 11.08. It's not traded too much higher than that, 11.0980, so call it 11.10 and 11.02. So we've got under a $10 range as we wait with bated breath and anticipation for the conclusion of the FOMC monthly meeting, which is scheduled to begin on Tuesday and reported about on Thursday. So my sense is right now, as we look at this week just starting to form, of course, we've had gold under tremendous pressure throughout the last 3 weeks, and that's after hitting a high at around 1171. We know we have our lows that came in roughly $100 below that point. And in between that point, we do have a couple of different key areas that I believe are really important to watch, Fibonacci-based resistance and support level, of which I really believe one of the key or most important levels to watch currently has got to be the 1109 area. We pointed it out in a basic fib retracement that we have been looking at, and that of course is this level right in here. And as you can see, we're trading just below that, currently at approximately 1108, 1109 in that area, but just right in that area. We're looking at a 720-minute chart, and as you can see, I've just converted that into a candlestick chart so we can get true prices. Of course, we're looking at COMEX, which has just come to a close. We'll look at some of the spot charts, but they're tracking very much the same. But again, this is now in a standard candlestick format, and we are trading just under this fairly critical number in terms of a technical level. Now, my sense is that we should see this market head lower. We've had it under pressure, and it's simply a matter of positioning ourselves incorrectly to put on this next trade. Now, of course, with minutes being released on Thursday from the FOMC meeting, everybody is waiting to see whether or not they will pull the trigger, begin to raise interest rates, which is the vast minority of consensus right now. There's really, in terms of probability, maybe a 20-25% chance of that happening this month, a much better chance of it happening next month. But it is data driven, according to Yellen. And for that reason, with some of the data that came out with the correction that we saw and China under pressure, they might in fact hold off this month. My sense is they will. Silver, on the other hand, is having a rather tough day, trading off well over 1%, about 1.25% on the day, off about 16 cents. We can look at it in a couple of different ways, but there's absolutely no doubt in my mind that we are at a really critical area. You can really see that when you look at this weekly chart. Let's go ahead and kind of expand these data points so you can see what we're looking at. But we have one basic fib retracement that is in this particular chart. And it is simply from about 1850 down to these tracked lows here at approximately 1450. And there's no doubt when we look at these series of lows that we've had in here that there has been quite a big band of support. You can see all these lows right in here. And once again here, aside from this one particular glitch, I'll call it, but this is a weekly chart. But when we take a look at this particular move here, that's the only time that it tracked and broke below that point and actually broke to 14. Now, we're now at the bottom ends of this scale, so I am probably looking for this market to head lower. Lastly, as far as silver goes, I have adjusted the basic fib retracement so that we're only looking at the rally coming in from about 1776 on down, so we can ascertain upper levels of resistance. We know where support is, but when we look at it this way, there's a couple of ways we'll look at it. 1487, that's going to be a number you want to watch if we see any kind of upside move in the market. And to look at the more detailed support and resistance levels, meaning just this last rally, which is what we've just done. We've got one now that goes from 14 up to 1566, so we can ascertain on any levels. 1438, critical level of support. And then in terms of resistance, you've got 1463 and then 1482. Those would be the key levels in silver. So as I said, my sense is right now that we will see further decline in the precious metals markets this week. I am looking for lower pricing. We've had 3 weeks of continuous down action, weekly chart or daily chart. You've really got an inside trading day, very, very tight range. Lastly, when we look at our Japanese average charts on a daily basis, let's go ahead and blow that up. Although we're still in red, there's no doubt about that, we have a real diminishing body size here. The good news is there's no upper wick there, meaning it never traded above the midpoint of the prior session on this daily chart. But if you look at body size, you're really seeing a diminishing size, and that's typically what you'll see as you get near a pivotal point. What you almost certainly will see at that pivotal point will be both upper and lower tails in a small body, very doji-esque, very, very much like a doji or a pivotal candle. That's what we would look for a reversal. The really wild card, of course, is the FOMC meeting. That will be scheduled tomorrow. And it could have an immediate bounce if they announce they're postponing any interest rate hikes. Could give the metals a bounce. We'll have to see. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.